What's up, guys and gals? Anthony here with Special Analysis. Hope you're having a wonderful day. So I've had a lot of questions about how do I catch the big move when using the Profit Pack. And I want to break down the approach that I take. Again, you could take this with a grain of salt, but if you're looking for the big move, if you're looking for the payday, if you're looking for things to go in your favor and ultimately produce that rewarding income that you're after, you need to pay yourself, protect yourself, and let those winners absolutely run. So let me break down what you see in front of you here. We have a trend change that occurred right here. We have an impulse, a shallow correction, another impulse, a qualifying correction, a trigger candle right here. This is where you want to enter the market, or it's a sell entry. You want to place your stop one tick, pip, or penny above that trigger candle, stop loss. You want to start taking your profit as it moves in your favor. Now, you can do it as aggressively as you want. In this example, your first profit taking would be a 3-to-1 risk-reward ratio, meaning if you're risking 10 ticks, you want to take your first profit at 30 ticks. Once this has happened, you should be paying yourself, meaning selling a portion of your position, and protecting yourself, moving your stop loss from where it was to your entry, period. Now, you are no longer assuming any further risk in this trade. But you say, hey, listen, that's all wonderful, but I want the big win. I want this trade to pay my monthly bills. Well, it can by simply managing the stop loss and doing nothing else. So we know that we only want to trade the first qualified correction, the first true penetration of the profit band, which is the trigger here. So where does that occur again? Right here. So a new trigger candle appears through the profit band. And once that has printed, meaning the price continues going in this direction, you want to take your stop loss from your entry and drag it all the way down here. Now, you've just protected all this amount of money from giving any of it back. Pretty simple, right? Well, what happens next? The market impulses again, comes back, corrects again through the profit band. You can see that wick penetrates the profit band. And then as soon as this prints, what do I want to do? I want to take my stop from here, and I want to move it over here. So, did I catch the absolute tippy bottom of the trade? No, but I saved all of this profit and I got stopped out right here. So I probably got stopped out. If this is 3-to-1, this is likely 5.5, 6-to-1 is where I ultimately got stopped out. You pay yourself here, you protect yourself when this occurs, and then you just keep moving the stop to each new qualified correction. Okay? You don't want to run it too tight if you want the big run, because we don't know how aggressive a market's going to trend or not. So if you just sit here and try to follow behind, one or two bars, you're probably going to get stopped out and miss this whole big move. But if you've already collected your day's pay, if you're already no longer risking any amount of money, what do you care? Don't be a greedy pig. Just give it a chance. If it's going to go, it's going to go. If it doesn't go, then so be it. There'll always be another trade. But placing your stop here upon the print of this candle, and then placing your stop here upon the print of this candle, you have literally captured 90% of the move. That's it. If you want to make money in this industry, if you want to trade, if you truly want big winners and small losers, you must stay in a trending market. Period. That's it. Okay? Unless you're ultra proficient at capturing small pieces over and over and over and over and over again, you must stay in for the big wins. And this is how you do it. You pay yourself, you protect yourself, and then you allow the balance of the trade to transpire with a very conservative stop placement. And that's it. So if you want to learn more, you can go to anthonyspecial.com/Kevin Harrington. There's a training video there for you to watch. It will give you a full understanding of the profit pack, but I've had many questions about how do I stay in the trade, and that is what this video is all about. It's about how you stay in the trade to get the maximum amount out of it. If you micromanage it, you will fail to get the maximum amount out of it. It just is what it is. So I'm not trying to discourage you, but I'm trying to tell you that if you don't follow a rule-based system and one that is proven to work over time, you will ultimately not succeed. And I'm here to see you succeed and help you succeed. And the way to do that is to follow the plans that have been laid out, that have been time-tested and are proven to work. You will venture off into attempting to kind of create your own rules, and at the end of the day, you will end up not being nearly as successful by just simply using the software as it's designed to be used. All right, guys, I'll see you in the next video. Hope you have a wonderful day, and keep those profits big and those losses small.